Hello and welcome to this week's vlog with me, David Jones, and Trading 212. This is for week commencing the 15th of May. First of all, let's catch up with what was happening last week. We had that second round of the French presidential election. Results came out on Sunday, and as we saw in the first round, we saw markets sharply higher on Sunday night. At relief, the result had gone the way it was expected. We saw the euro open a lot higher, but unlike last time round, we saw plenty of those gains given up fairly quickly. So we saw the euro in retreat for much of last week. It was an odd week for stock markets. We saw the US, the S&P 500, so the broader US stock market, managed to push out, I think, to a fresh intraday all-time high. So it was really strong during the day, but as the week went on, those gains were given up as well. So we saw what ended up being another week of fairly choppy trade in stock markets. Now, looking ahead to this week, it's a bit of a quieter week. There's a focus, quite a focus, I think, on UK data this week, which is always an interesting one with Brexit and the general election coming up in June and how the pound has been recovering. So the first thing to look out for, Tuesday morning, 9:30, we've got UK inflation data. That's expected to show inflation of about 2.4% over the last year. So the market to watch here is clearly a pound against the dollar, euro sterling, those sort of currency pairs. And then after that, at 10 o'clock Tuesday morning, we've got the latest Eurozone GDP data. So we'll see how well or how badly the European economy is doing. Then on Wednesday, we've got UK unemployment data. And then on Thursday, we've got some more GDP data, and that's out of Japan. That's in the early hours of the morning, 10 to 1 in the morning. We'll see how well the Japanese economy is doing. So there's a few bits and pieces to keep an eye on in the week ahead. Now, as usual, we're going to do a strategy session today. And I think what we'll do, we'll carry on the theme from last week when we were looking at patterns. So last time round, we looked at double tops and double bottoms. This week, we're going to take a look at the head and shoulders pattern. Now, I think even if you don't know much about charts, if you've ever looked at markets, you've probably heard the phrase head and shoulders. So we'll look at, well, what is this thing in theory and how does it work in the real world? I have to say, I am not a big fan of all these patterns. I think one of the problem is you can end up trying to spot patterns everywhere. And the result is you don't see the wood for the trees. You're so confused in trying to spot double tops, double bottoms, head and shoulders, all this sort of stuff. You miss out on major markets trends. So I'm a bit of a skeptic, but first of all, let's take a look at how the textbook reckons these things should look. Let's take a look at our fictional market. So we'll start off a market that's in an uptrend. Everything's progressing fine, hits a level, makes a higher high. So for now, the trend is definitely up. But it's when we get this sort of thing happening, where the market makes a lower high. So it starts to look as if the trend is possibly running out of steam. This is where we have the potential head and shoulders. So we've got our shoulder there, head and a shoulder there. And what we're looking for is this thing called the neckline. So it joins the two shoulders up, and it's when and if this level breaks, then that's the sell signal from a head and shoulders. And what chartists will look at, they'll say, well, if the head was, for example, 50 points high from the neckline, they'll be looking for that move to be repeated here if that neckline breaks. So that's a head and shoulders after a market that's been running higher. Let's take a look at a head and shoulders, an inverse head and shoulders that occurs after a downtrend. So again, we have our fictional market moving lower, hits a low, rallies, hits a lower low, everything's okay. But it's when we get this sort of thing happening, suddenly we have the potential for a slightly higher low down here. Again, we have our neckline, we have our shoulder, head, shoulder, and it's when this level breaks, then that's the potential buy signal. And once again, wherever the height of the head is from that neckline, that's the target that people will be looking for when that shoulder breaks. So that's how it works according to the textbooks. So that's the textbook approach. As I say every week, how it works in the real world is often not quite as perfect as the textbooks would have us believe. So let's take a look and see if we can spot a head and shoulders pattern in a real market. So here's our real world example of a head and shoulders. What I've got here, this is an hourly chart of euro dollar. And what we're looking at, this is the week before last. This is the 3rd, the 4th of May, going into the Friday. We had the market moving higher, sold off a bit, moved higher again. Then we get that gap open on the Sunday night. Market sells off a bit, everything looks okay. Then we get this lower high. So this is where we now have our potential head and shoulders. It might look a bit complicated on this chart. I'm going to change it to a line chart in a minute. But what we're looking at, shoulder here, head, shoulder. Let's flip this over to a line chart and it should be, I think, quite a bit clearer. So here we go. It's a little bit messy. It's not quite a textbook example, but the market moves higher. We have a shoulder there, head there, then we have our lower high. So it's when this peak is formed that we have the potential for our head and shoulders. Let's draw in our neckline. So we're going to choose the trend line from here, and we're going to take it from here, the base of that first shoulder, underneath the head, and there we go. So it's the break here. That was the completion of the head and shoulders. Now the head peaked around about, what's that, 1011, and the base was about 109.64. So we've got almost, what, 40, 50 points. So that would be our target from the break point here. And you can see, even though I'm a bit skeptical about these sort of things, that's a pattern that worked particularly well in this case. So that's the head and shoulders in euro dollar on an hourly chart from a couple of weeks ago. So that was euro dollar. So it did actually work. It worked pretty well in that example. So maybe I shouldn't be as skeptical as I am, but that's not going to change my mind. The market we're going to focus on now, it's a bit of a different one to ones we've covered in recent weeks, but I think it's a really interesting one, building on some of the strategy approaches, some of the trading techniques that we've been talking about in recent weeks, because there's a couple of them that are coming together. So we're going to have a look at the currency pair, New Zealand dollar, US dollar, because I think it's approaching what could be, I think, something of a critical few days or couple of weeks. Let's start off with our big picture view of New Zealand dollar, US dollar. So we're going back here to 2008. It's a chart, it's a weekly candlestick chart, this. And you can see it's a market that does trend quite well. And we did have, from 2014, this downtrend. So let's put our trend line in. So it looks something like that. And then over, the last year or so, about a year ago, it broke out of this downtrend. Let me just zoom in a little bit. You can see the market, it took a while, from August 2015 through to February last year, but made a base, broke out through the downtrend and started making higher highs. So if we put our trend line in now, this is why, for me anyway, things start to look a little bit interesting. So we'd had this uptrend from last year. Let's change this to a daily chart so we can see that trend in a bit more detail and just zoom it out. So we can see the start of that trend line back at the end of 2015. The market pushed higher, but did run out of steam during the summer last year, August, September last year, ran out of steam. But why it's interesting is for a couple of things that we've covered in recent weeks. First of all, that trend is still up. We've got trend line support coming in around about there, 66.90 sort of area. If we put on horizontal support, we've got old support from back here. That was a pretty major low, around about 66.70. That sort of area. We're currently trading about 150, 170 points above this level. But also, you remember when we were talking about RSIs, we have the RSI giving us an oversold signal here, which worked pretty well. Then it went oversold again at the end of April, and that worked okay for a couple of days, but the market has pushed a bit lower. But what's interesting is we have this idea of RSI divergence. The market has pushed a little bit lower, the RSI is making higher lows. So it can suggest that maybe the weakness is running out of steam. It doesn't mean it's going to turn around tomorrow, but I think it does make it an interesting market to watch over the next few days, over the next couple of weeks, because this trend is still up, because we've got big support, plus we've got the RSI giving us this bullish divergence signal, suggesting that maybe the weakness is starting to run out of steam. So that's New Zealand dollar, US dollar. I think it's a really interesting one to watch now because of that trend line, because of the support, and because of that RSI divergence that's building up, it'll be, I think, worth keeping an eye on to see how this does pan out over the next couple of weeks. We'll wrap things up there. If you subscribe to the channel, you can do that by clicking on the button that should have magically appeared there, and you'll get notified when the next video gets uploaded. If you'd like us to cover anything in the future, then just leave us a message in the comments below. And if you've liked the video, just click the thumbs up as well down there. But we'll wrap things up there for this week, and I hope you have a good trading week.